Howdy, everybody. Welcome to Liberty Call. Today is Wednesday, July 16th, 2025. Hope you're having a fantastical day out there in the interwebs. Well, it is a little gloomy here in Colorado, and looks like we might get some more rain. So apologize for not doing the show yesterday. I was under the weather. I felt like crap. Had some drainage from my sinuses. It upset my stomach. It was a mess. Anyways, all right. Well, tech led the charge as NVIDIA rocketed on blockbuster AI chip sales to China, pushing the S&P and NASDAQ to fresh record highs. But inflation crept higher in June, up 0.3% on the month and 2.7% year over year, dampening hopes for imminent, Fed rate cuts. Banks lagged, crypto stocks clawed back some gains, and tariff tensions remained a storm cloud on the horizon. But on the surface, the foundation's still twitchy. So before we break all the news down today, I need some help from you. Give me some thumbs up, a like, share, subscribe, a follow, and press the notification bell. All righty. Well, let's get to the markets for today. Dow Jones was up 0.53%, 231 points, closed at 44,254. S&P 500 up 0.31%, 19 points, closed at 6263. NASDAQ up 0.26%, 52 points, closed at 2730. The VIX down 1.38% today. It's at 1714. Canada up 0.37. Brazil up 0.22. And Mexico down 0.03. Jumping over to Europe, Germany up 0.07. The UK down 0.13. France down 0.57. Netherlands down, 2.29%. Spain up 0.08. Italy down 0.4. And Switzerland up 0.03. And Portugal down 0.17. Russian exchanges both in the green today, both of them up 0.66%. And the overnight markets, the Nikkei in Japan was down 0.04. Australia down 0.79. New Zealand up 0.88. In China, the Shanghai down 0.03. Shenzhen Component down 0.22. China A50 down 0.31. DJ Shanghai down 0.08. Hang Seng down 0.29. And the Taiwan weighted when it closed on the 15th was up 0.98. Whew. All right. Good stuff. All righty. Well, let's get to the market recap. S&P 500 cuts losses after Trump denies reports he's close to firing Powell. It's like days of our lives with these folks. It's just, 1 minute they're fired, the next minute they're not, blah, 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 back and forth. All right. Markets clawed back losses Wednesday after President Trump denied reports that he was preparing to fire Federal Reserve Chair Jerome Powell, which I don't think he could do without any real cause. While reaffirming Powell's job security for now, Trump didn't hold back criticism, blaming Powell for high interest rates and a mismanaged Fed headquarters renovation. Okay, well, first of all, the interest rates had to go up because remember Trump when he was president back in 2020 and did all that stimulus and then followed it up when Biden did the same thing? Yeah, that's the reason they had to raise interest rates, because they created a ton of inflation. Had to bring interest rates up to bring the inflation back down. But hey, Trump's not an economist. He's barely cogent. Anyways, all right. The statement eased market jitters, at least temporarily, but underscored ongoing tensions between the White House and the central bank. Meanwhile, inflation data offered mixed signals. The producer price index was flat in June and slowed to a 2.3% annual pace, below expectations, suggesting easing pressure on input costs. This contrasted with a hotter consumer price index numbers from Tuesday, which showed prices up 2.7% year over year. The divergence between wholesale and retail inflation has markets questioning how much the tariff-induced price hikes are being absorbed by businesses versus passed on to consumers. The Federal Reserve's Beige book, due later today, is expected, we'll cover that in a second, is expected to highlight stagflation-like dynamics, sluggish growth, and upward price pressures from trade disruptions. Analysts anticipate more anecdotal evidence of businesses struggling to navigate policy uncertainty. Speaking of which, Trump doubled down on tariff threats. A 200% levy on pharmaceutical imports is slated to hit by month end, alongside new duties on Indonesian goods. These moves follow preliminary trade agreements with UK, China, and Vietnam, though markets remain skeptical of any long-term stability in Trump's, quote, reciprocal tariff, end quote, approach, especially with the August 1st deadline looming. Earnings season continued with a flurry of bank results. JP Morgan, Citi, and Wells Fargo beat expectations, With issued caution over trade and fiscal risks, Goldman Sachs and Bank of America impressed on trading gains, while Morgan Stanley lagged despite a strong quarter. Tesla rose 3% after announcing a six-seater Model Y, and crypto stocks rallied on optimism that stablecoin legislation could finally gain traction in Congress. A six-seater Tesla. Wow. I guess, well, Elon's got like 40 kids, so he probably needs lots of space in his cars. So, and maybe he's just trying to incentivize people to have more children. Because, I mean, right now, especially with the seatbelt laws that went into place back in the 80s when I was a kid, and I was not real happy that I had to wear a seatbelt in the back seat. Granted, it's safer, but my mom or dad never hit anything, so I, never went flying through the windshield. But that really put a big squish on the family unit back then, because if you had a car with two seats in the front, maybe a third in the middle in the front, and then you could fit two comfortably or three across the back row usually. So you really couldn't unless you wanted to get a minivan or something like that, which I wouldn't be caught dead driving one of those things. But anyways, that's how it is. So we only had two kids. My wife had one from her first marriage, and then we had the second one together. So we were a two kid household. But anyways, all right, let's get on to the next article. You don't want to hear me babble about stupid stuff. This is a data report from First Trust, June industrial production and capacity utilization. So let's see what's going on there. The industrial sector finally showed a pulse in June, marking its first monthly gain in 4 months with a 0.3% uptick in overall production. Upper revisions to prior data and strong showing in core manufacturing suggest producers are gradually adapting to the evolving landscape of U.S. trade policy. While headline manufacturing barely budged, rising just 0.1%, that figure was dragged down by a sharp 2.7% drop in auto production, a segment still reeling from global supply chain volatility. Strip out autos and the picture improves. Core manufacturing rose 0.4%, its first gain since the announcement of, quote, Liberation Day, end quote, tariffs. High-tech equipment production led the charge, up 0.5% in June and 13.2% year over year, driven by AI-related investment and domestic semiconductor reshoring. Business equipment production is also on the upswing, advancing at a 12.9% annualized pace over the past 6 months, with gains spread across transit and industrial gear, not just tech. That, this points to a broader U.S. reindustrialization underway. I'll believe it when I see it. Utilities output, always weather dependent, surged 2.8% in June. The mining sector, however, dipped 0.3% with slower metals extraction and drilling activity. Oil and gas held flat for the month, but is up 2.4% year over year, with expectations of increased activity under more aggressive permitting in 2025. All right. We got another data report. The June PPI, also from First Trust. Mr. Andrew Opdyke put this article together. So despite ongoing tariff anxiety, producer price data suggests inflation remains largely contained. After notable spikes in late 2024, producer prices have cooled significantly, with June marking another month of flat, quote, core, end quote, inflation. The core producer price index, excluding volatile food and energy, was unchanged month over month and up 2.6% year over year. That's still within the Fed's comfort zone and well below levels that would justify rate hikes. Goods prices edged up slightly in June, led by a jump in communications equipment, but their overall trajectory has been tame, rising just 0.8% annualized over the past 6 months. Service prices, which carry greater economic weight, declined 0.1%, dragged down by a sharp 4.1% drop in travel accommodation costs. This helped offset modest gains in machinery and parts wholesaling. Energy and food prices followed their usual unpredictable pattern, climbing 0.6% and 0.2% respectively. But even with tariffs pressuring select categories, the overall inflation trend remains mild. The report underscores a key point. Tariffs may shift pricing within sectors, but they don't necessarily raise total inflation, especially when money supply growth has been stagnant since early 2022. With producer prices up just 0.2% annualized since January, the case for modest Fed rate cuts is quietly strengthening amid continued monetary tightness. I don't agree. I'd raise rates. I'd bump them up to like 6% and see what happens. I'd like to see prices get back to 2019 levels. You know, why do we have to have everything get more expensive every year? I mean, there's really not a need other than growing the monetary base so that the government can continue to overspend year over year. Anyways. All right, one last article from Zero Hedge. Beige book spells trouble for Powell. Mentions of inflation tumble to 4-year low as growth concerns mount. Markets and Fed watchers expecting a fresh inflation wave were once again proven wrong as the latest CPI, PPI, and Beige book reports painted a picture of modest growth, muted inflation, and continued deflationary pressures despite aggressive tariffs across the 12 Federal Reserve districts. Economic activity picked up slightly from late May through early June, with 5 reporting modest gains, 5 flat, and only 2, New York and Philadelphia, posting declines. Businesses remain cautious amid ongoing uncertainty, especially around trade policy. Consumer spending softened, particularly in autos and non-auto retail. Manufacturing and services were mixed, while construction, agriculture, and energy showed signs of weakness. Loan volume and some tourism helped offset slower sectors, but the overall outlook remained neutral to slightly pessimistic. Employment increased slightly overall, but hiring was restrained, and automation investments are rising as firms adjust to tight labor markets and immigration shifts. Wages grew modestly, and while input costs rose due to tariffs and insurance hikes, businesses struggled to fully pass those costs to consumers, compressing margins. Most critically, inflation is simply not showing up in any meaningful way. The Beige book revealed the fewest mentions of inflation in 4 years, reinforcing that price stability is holding, contrary to expert warnings. With producer prices up just 0.2% annualized and money supply growth still stagnant, well, I wouldn't go. It is up a bit this year. The report adds pressure to the Fed to consider rate cuts. The economy isn't booming, but it's not collapsing either, marking claims of a Trump-era inflation explosion look increasingly detached from reality. Well, I don't know. I mean, it's certainly not going, prices aren't going down again. And that's my big complaint is that, they're like, oh, look, inflation's back, down to 2% ish. But that doesn't take into account all of the price hikes over the past 5 years that have really put a damper on, the consumer, especially people on fixed incomes. They're stuck and they're in a really tough spot. So anyways, all right. Well, that is everything that I had to babble about today. If anyone needs anything from me, where do you want to go? DSAFinancialGroup.com. All your financial planning needs can be addressed there. So give me a call. I'll be glad to help. Hope everyone out there has a wonderful evening, and I'll talk to everyone again next time. Adios.